Everyone saw AMD spike 23% and thought, too late, but here's what they missed. This OpenAI deal didn't just move the stock, it changed the business. AMD didn't land a headline. They locked in a 6 gigawatt agreement that forced analysts to double their revenue forecasts. They didn't sell chips, they sold multi-generational infrastructure. For the first time, AMD has leverage, revenue scale, platform influence, and a real shot at competing in the software layer that's been NVIDIA's playground for a decade. The fundamentals have changed, but the price might not reflect that yet. Let's break it down. No fluff, just facts. Everyone's treating this like a win, but this wasn't a prize, it was a pivot. OpenAI didn't pick AMD because they were impressed. They picked AMD because they had no choice. NVIDIA's chips are nearly impossible to get. Supply is maxed, lead times are brutal, and OpenAI can't afford to wait. They're scaling faster than any company in AI history. They need millions of GPUs now. So they turn to AMD, not because the hardware is better, but because it's available. On paper, this looks like a supply chain workaround, but under the hood, it's something much bigger. AMD didn't just sell chips, they offered access, a seat at the table, and OpenAI took it, because this time, they're not just buying hardware, they're shaping the roadmap. See, the real battle in AI isn't just hardware, it's software. NVIDIA has CUDA. It's their secret weapon, a full-stack software ecosystem that locks in developers and dominates training workflows. AMD has something called ROCm, short for Radeon Open Compute. It's their answer to CUDA, open source, flexible, and mostly ignored. Why? Because it lacked support, it lacked tools, it lacked a real user base. ROCm was a weak link, and every investor who knew the space saw it, until now. This OpenAI deal changes that, because when the most powerful AI company in the world starts guiding your software roadmap, things get serious. This isn't just about buying chips, it's about alignment. AMD didn't get a client, they got a partner, and that changes the trajectory of the entire company. This is how weak spots turn into moats, and it's why this deal isn't just big, it's fundamental. Everyone's talking about the hardware. They're missing the moat the media is focused on. Chips, performance, specs, speed. That's the bait. But the real story, it's what this deal reveals about AMD's moat, or lack of one up until now. Before this partnership, AMD had no real lock-in, no ecosystem advantage, just fast hardware and a lower price tag. Meanwhile, NVIDIA didn't just sell chips, they built the rules. Their platform is sticky. Developers build on it. Data centers are wired around it. Once you're in, switching is expensive. That's how NVIDIA kept control, not by being cheaper, but by being irreplaceable. AMD never had that. Their tech was strong, but replaceable. They were a commodity in a market chasing dominance. But this deal with OpenAI could flip the script. When a major AI player starts deploying your platform at scale, they're not just buying hardware, they're shaping the tools around it. They're buying workflows, libraries, and infrastructure that only work if your product sticks around. That's how a moat gets built, not through specs, but through dependence. And if other enterprise players follow OpenAI's lead, AMD doesn't just become relevant, they become part of the default architecture. And that's when the game changes. $42 billion. That's what's at stake. Most investors don't actually run the numbers. They hear big deal and think it's just noise. But here's what this really did to AMD's business. It doubled their future AI revenue projections from around $20 billion to $42 billion by 2029. That's not a guess. That's the new model. And it's not just revenue. Growth is now expected to run at 30% or above per year, compounding for the next 5 years. Before this deal, AMD had strong potential. After this deal, they have a growth engine. Think about what that means. Wall Street has to rewrite every forecast. Cash flow models change, margin assumptions change, long-term valuation resets. That's what people missed in the headline. A 6 gigawatt commitment is not just a sale, it's a future locked in. You don't land that kind of deal unless the other side believes you'll be around to deliver, not just this year, but for the next decade. And the result is this. AMD is no longer chasing AI. They're inside the system, and $42 billion is now the scoreboard. The NVIDIA trap. Why AMD's valuation could still burn you. This is where investors get reckless. They see the breakout, the OpenAI headline, the 23% spike, and think, I need to jump in before it runs more. But here's the reality. AMD is now trading at a PE ratio of 117. Compare that to NVIDIA at 53. And now look at profits. AMD's net margin is 9.6%. NVIDIA's is 52.4%. One of these companies is keeping half of every dollar it earns. The other is barely keeping a tenth. So ask yourself, how is AMD, with lower margins and less control over the ecosystem, being valued at more than double the market leader? That's the trap. The market is pricing AMD like it already won, like the moat is built, like the profits are secured. But this is still early. AMD hasn't proven it can scale margin or defend software share. At a PE of 117, there's no margin for error. If execution slips, this multiple shrinks fast. This doesn't make AMD uninvestable. It makes it conditional. The upside is real, but so is the risk. Don't confuse momentum for safety, and don't buy a perfect future unless you're ready to hold through the messy present. So let's talk bulls versus bears. Is this a long-term buy? This isn't about hype, it's about execution. AMD is either about to compound capital at a massive scale or get punished for overpromising. There is no middle lane with a PE of 117. So here's what the bull case looks like. OpenAI's partnership turns AMD into the second default supplier for global AI infrastructure. ROCm evolves fast, gains traction, and removes NVIDIA's software monopoly edge. AI revenue grows from $7 billion today to $42 billion by 2029, and AMD proves it can protect margin while scaling. And hyperscalers and enterprise customers start stacking AMD hardware to reduce dependency on NVIDIA. That's the high-reward scenario, and if AMD executes, the upside is real. But the bear case. ROCm fails to gain real adoption. OpenAI slows rollout or pivots directions. Margins stay weak. Execution slips, and AMD becomes a hardware vendor without leverage. The market realizes AMD can't defend the valuation, and the multiple collapses. The bear case isn't doom, it's dilution. Hype unwinds, expectations reset. So here's the bottom line. If AMD hits their numbers, grows margin, and locks in ecosystem support, this will be one of the best performing tech stocks of the next decade. But they don't have a moat yet. They're building one on the fly. This is not a stock you buy and forget. This is one you watch closely. It's execution that separates winners from headlines. What I'm doing right now, is this a buy window or a bull trap? AMD got the contract. That's huge. This isn't a demo, it's deployment. And it might be the biggest break they've ever had. But now comes the hard part, delivering. Winning a headline is easy. Fulfilling a multi-billion-dollar order on time, at scale, and with software that works, that's what separates speculation from real infrastructure. If AMD pulls this off, if they deliver on schedule and show real traction, this opens the door to more contracts, more partners, and more trust. That's when the flywheel starts. That's how the moat gets built. Until then, I'm watching, not chasing. I'm looking for a pullback or consolidation, and when it comes, I'll be using my custom TradingView indicators to spot the setup that fits my system. If you want to try those tools yourself, I've got a free trial link in the description. Right now, this isn't about hype, it's about execution, and that's what I'll be tracking every quarter from here on out. Let me make this simple. Everyone says they want better results, but most people never plug into the process that actually produces them. Who else is breaking down AMD's moat, NVIDIA's margins, and the real data driving the AI trade, while showing you exactly how to build and manage a position in real time? Nobody. That's why NVIDIA is still my second largest holding, and why I'm tracking AMD's next leg higher with precision, not emotion. Richard took one setup from the JR4 hot stock list and pulled in a 72% gain. And LDJ800 grew his Roth account using the same momentum rules we use every day. And my own accounts are up over $2.3 million year to date with a 69% return. That's what happens when you follow a system instead of chasing noise. Inside my Patreon, you get real-time trade alerts with full breakdowns, entries, exits, and the why behind every move. Daily breakdowns on what actually moves the markets, the exact momentum strategies I use to scale seven-figure positions with discipline, and access to the most execution-focused community of investors I've ever seen. It's only $30 a month. If that sounds expensive, ask yourself how much you've lost trading alone. And if my Patreon doesn't sharpen your execution or grow your account, cancel, no drama. But if you're serious about results, you already know what the next move is. Stop consuming, start compounding, because the truth is simple. Results come from execution, not intention.